Okay, warm welcome to everyone. We are all aware of the budget session by the Honorable Finance Minister, Ms. Nirmala Sitharaman, on 1st February on the Finance Bill 2023. So on this, KSE has organized a series of 6 short webinars on breaking down the finance bill with regard to the Income Tax Act. So today's evening session is on amendments related to capital gains provisions, taxation of life insurance policy, taxation of share premium by CA Sandeep Chalapati. On behalf of KSC and fellow members, I warmly welcome CA Sandeep Chalapati, sir, for this session. So welcome, sir.
Thank you, Vignesh.
Before we get into the session, a few words on Sandeep, sir. Sandeep, sir, is born in Bangalore, Karnataka. He is a commerce graduate from Bangalore University. He has done his articleship in MSSV and Co Chartered Accountants, Bangalore, and is practicing as a chartered accountant from 2015. After his qualification, he continued in MSSV as manager for direct taxes, litigation and consultation. And in 2020, he became a partner of the same firm heading the direct taxes team. He was a faculty in many private institutions for commerce subject for pre-university students. He is a regular speaker at all the chapters of ICI, KSCI, Income Tax Practitioners Association on topics like TDS, ICDS, taxation of cooperative societies, finance bill and acts. So thank you very much for today's session, sir. Over to you, sir.
First of all, thank you, Vignesh. And when Mr. Deepak Chopra, who is the Direct Tax Committee Chairman of KSCA of this term, when he asked me to speak on this one, I asked the concept of this entire budget sessions. So they told me that, sir, it will not be a kind of thing where in-depth analysis of all those things, where it will not be useful for the day-to-day regular practitioners, but the important amendments which are useful for them and the exact intention and relating examples are required for the session was explained to me. So and he gave me one abbreviation of this one, or a terminology for this, that is KCA shorts. I was impressed with this concept when he told me, and I immediately accepted this. So going by this entire concept and this first session of this discussion, that is we have 6 sessions as Mr. Vignesh explained. We'll be dealing with about 4 scenarios or 4 clusters of the amendments. That is with respect to this life insurance policies and double deduction of house loan interest with respect to amendment came in section 48 as a proviso, and amendment in section 54 and 54F where investment, there is exemption available by way of investing the amounts or sale proceeds in residential houses, and with respect to 5627B for issue of shares for a non-resident, that is by a non-resident. So with this introduction, let us understand what is the amendment, what is the intention, what is the impact, and some important points. I will not say that directly as with due respect that drafting error or anything, but the intention in memorandum explaining the provisions of finance bill and the language used in the finance bill are not correlating to each other. The reason why I'm saying this is we'll understand when we are going through this section 54 and 54F and even section 1010D. So with this introduction, let us start with section 10D. Vignesh, am I audible? Whatever I have said as of now, because I just wanted to confirm. Yes, okay. So going with section 1010D, the amendment what has been brought in section 1010D is proviso. That is, with respect to 6th proviso has been substituted with 6th, 7th, 8th. That is 3 provisos have been introduced. Let us understand what is this clause 1010D. 10 section 10 clause 10D speaks about or provides exemption of any amount received under life insurance policies. But there are little some of the restrictions or some of the conditions for granting that exemption. For example, if it is a life insurance policy, then it will not be exempted under section 1010D. And if it is with respect to some policies, some insurance policies, that is life insurance policies, where the premium paid in any of the years during the life term policy or the term of the policy, I stand corrected, term of the policy is exceeding 10% or 20% as the case may be, those insurances, life insurances, when it is being paid back or when it has been renewed, when we get the money, that will not be exempted because of this violation. So in Finance Act 2021, there was a amendment. They said that if it is a unit linked insurance policy, that is ULIP, and if the premium is more than 2,50,000 per year, that is per annum, in any of the year during the term of the policy, then such life insurance policy, when it is when we receive that insurance amount, that is sum assured, such amount will not be liable, that is eligible for exemption. And they specifically mentioned that this exclusion of exemption, that is taking away of this exemption, it starts from, or it is applicable only for the insurance policies issued on or after 1/2/2021, that is 1st February 2021, which is the introduction of this budget or finance bill in the parliament. So a similar amendment has been carried out in this finance bill also. So let me explain you this, what is this amendment. So this amendment is to exclude certain insurance policies, to exclude certain insurance policies other than ULIP, which has already been excluded if any violation is there from this exemption. From this exemption portion, there is any insurance policies other than ULIP will be excluded from this exemption policy if the premium paid during any year of the policy, that is year of policy term, during the term of the policy, exceeding 5 lakh rupees. So which is similar to that ULIP itself, where 2.5 lakhs was a limit. Here it is other insurance policies is about 5 lakh rupees. So it has been introduced as 6th proviso. There is substitution of 6th proviso. 7th proviso speaks about in case if those insurance policies are in multiples, that is in case not it is not only one insurance policy, you have multiple insurance policies, that is 2 or more. If that is the case, then aggregate amount of insurance premium should be 5 lakhs, and the mechanism of the calculation for which policies it is exempted, that will be defined in later part, that is in the rules. A similar computation mechanism was provided in circular number 19 of 2021 for ULIPs also. So as of now, what we have to understand this is it is a similar amendment to ULIP, where the premium is about 5 lakh rupees, that limit. So when this amendment is applicable, it is not about from when, it is from for what all the policies, for which policies, that is any insurance policies other than ULIP issued on or after 1st April 2023. 1st April 2023. So for those policies, this provision is applicable. And the 8th proviso is nothing but the earlier 6th proviso, erstwhile 6th proviso has been taken as 8th proviso. That is, even if there is a violation, that means, let me give an example here. For this insurance policies, whatever the amended is there, every year I have been paying about 6 lakhs of premium. So therefore, if we read under section 1010D, I will not be eligible for the exemption when I receive the sum assured amount. But if it is on the death of the person, then irrespective of the violation, I'll be eligible for the exemption. That is what 8th proviso says. Erstwhile 6th proviso. So there is no confusion about it. It is about the change in the numbering of the proviso. That's all. So the intention is of this amendment is to prevent the misuse of the exemption provided in investing in policies having large premium contributions and claiming exemption on such sum received under such life insurance policies. Because what used to happen is the people were not using for the real intention that to avoid the risk of individuals, but as an investment pattern. For that reason, this amendment was introduced. So with respect to this implication is very clear that it is to avoid high net worth individuals or investment plans. So I would like to categorize this insurance policies under 5 heads. It is not heads of income. It is about 5 categories. Let me correct correct myself. It is about 5 categories. If we read section 1010D, this life insurance policy issued on or after 1/4/2003, but before 31/3/2012, the restriction on the premium amount was 20% of the capital sum assured. After subsequently, there was an amendment where it was mentioned that life insurance policy issued on or after 1/4/2012, but 31/3/2023. This is this, but before 31/3/2023, I am including this one. I will explain you later why I'm giving a significance to this expression called but before 31/3/2023. So with respect to this life insurance policy issued on or after 1/4/2012, the premium should not exceed 10% of the capital sum assured. That is, from 20% to it was reduced to 10%. So third category, I would like to say that now whatever the insurance policies have been, or whatever the insurance policies have been issued after 1/4/2023 as per this amendment. Because if you see, this 1010D is applicable only for the life insurance policies. And there is a separate category for ULIP. So therefore, when the expression used in section this 6th proviso, that is any insurance policy other than ULIP, that is unit linked life insurance policy, then it will be same normal insurance policies, that is other life insurance policies itself, where it is issued on or after 1/4/2023. So in those cases, premium should not exceed 5 lakhs. And if it is number of policies are there, then the aggregate amount itself is 5 lakhs. That is premium. So my intention about this provision, that is amendment, is my understanding is it need not have been a proviso to the section as 6th proviso, but as the clause whatever has been given under 1010D itself as a third category. When they are giving key man insurance policy, or for the first category or second category, they could have done under third category itself to restrict the entire amount, that is premium, to 5 lakhs from 10% of the capital sum assured. So in my view, this 10% of capital sum assured is no more applicable or no more available, provided if it is before, provided if it is issued before 31/3/2023. So fourth category is unit linked life insurance policy issued on or before 31/1/2021, where there is no limit as per the Finance Act 2021, where unit linked insurance policy is after issued on or after 1/4/2021, then premium should not exceed 2,50,000 as per this Finance Act 2021 itself amendment. So by summarizing this one is, this insurance policy is nothing but extension of the restriction for the other life insurance policies other than LIP, that is ULIP, and where the premium was restricted to 10% of the capital sum assured, now it has come to just 5 lakh rupees. So this is my understanding. At the later point of time, at the end of this session, I would like to discuss this one in case if any of the participants has any issues, so we can discuss among this. So similar or consequent amendment has been taken care in 56(2)(13) and section 224(17)(d). So in 56(2)(13), they say that to correlate with this section, that is amendment 1010D, the amount received from insurance policy other than ULIP or key money insurance policy, which is taxable under the head salaries or profits and gains of business or profession, is taxable. And the quantum of the amount taxable is, it is in excess of premium paid. If I receive about 10 lakhs as amount, which is not eligible for 1010D, then the 10 lakhs, out of the 10 lakhs, if I have paid premium of 8 lakh rupees, the 2 lakh rupees is taxable, provided that 8 lakhs of premium was not claimed as deduction under any of these sections. So this is the amendment carried out in 56(2)(13). With respect to 224(17)(d), it is very clear that to include this 56(2)(13) nature of income in the section, that is in the definition of income. So this is a brief idea about section 1010D. So next is, we'll be dealing with elimination of this dual deduction or double deduction of housing loan interest. So this is an amendment through a proviso to section 48 clause 2. 48 is a mode of computation available for arriving at the capital gains. So the proviso, what it says is, I'll read for the purpose of the participants. Provided that the cost of acquisition of the asset or the cost of improvement thereto shall not include the deductions claimed on the amount of interest under clause B of section 24 or under the provisions of chapter 6A. As everyone aware, when we have a house property and the house property income will be taxable under the head income from house property, and as per section 24A and 24B, we'll be having certain deductions. Certain deductions are available. With respect to 24A is a straight away 30% of the annual value. With respect to 24B, it is interest on the loan, housing loan, which was utilized for construction or purchase of the house property concerned. But there is a restriction for 23(2) properties, that is self-occupied properties, where the deduction will be limited to 2 lakh rupees. The amendment is with respect to what I'm trying to say is the amendment will not affect the self-occupied properties, but it is only with respect to let-out properties. The reason behind this is, if we specifically see that when the deduction is available for 2 lakhs for self-occupied properties, so the remaining interest amount can be claimed as deduction under section 48. So section 48 is a mode of computation where the cost of acquisition is a part of the computation, and the cost of acquisition, the reason for the amendment what has been carried out is, any deduction which has been claimed as interest under section 24B or any chapter 6A will not be claimed as deduction again at the time of computing the capital gains on the sale of any asset. So when I'm arriving at the capital gains, the cost of acquisition, what I'll be taking against the sale consideration, and such house with respect to such property, if I have already claimed any deduction with respect to interest on the housing loan, I will not be claimed as deduction. So the implication is to prevent the double deduction. As I said, under section 224B also, 24B also you'll be claiming as deduction. And when there is a sale of that asset, same asset, in the future years, you'll be taking this interest as cost of asset, cost of acquisition. Therefore, to avoid this double deduction, this proviso was introduced as an amendment. And as I said, this will not affect the self-occupied properties because the deduction was always limited to 2 lakhs. So in excess of any interest amount in excess of that 2 lakhs, you can claim this deduction under section 48. But if it is a let out property, there is no limit under section 24B. Therefore, you will be claiming entire thing as deduction. And under section 48, when you are arriving at the capital gains at the time of sale of such asset, the same asset, you will not be able to take this deduction. So for SOP properties, you will not have any issue, but in case if it is let out properties, you will face this issue. And this amendment is effective from 1/4/2023. That is AY 24/25 the same. So that means assessment at 24/25. But if our understanding is if the sale is taken place on or after 1/4/2023, that is April 2023, the interest claimed under section 24B cannot be considered as part of cost of acquisition, even if such interest amount is pertaining to prior to 1/4/2023. As an example, I have purchased the property in 2020 somewhere, and I'm selling the property in June or July of 2023, which is going to come, July 2023. In this 3 years claim, that is 30 till 31st March 23, I was claiming interest loan pertaining to that house property as deduction under section 24B, and it continued to be paid or in interest incurred in April, May, June 23 also. So when I'm selling the property in the month of June 2023, I will consider this 24B deduction claimed interest only till 31st March 23 and not from April, May, June 23 months. So I'll repeat this example. This is a very interesting issue. Even though I have claimed interest expenditure on a housing loan with respect to the same property as deduction under section 24B in earlier years, that is till 31st March 23, that can be considered as cost of acquisition when I sell the property in the month of June 23 or after 1/4/2023. But if I have claimed that the deduction 24B deduction in the month of April or May, June 2023, I cannot take that as deduction because the amendment is effective from 1/4/2023 alone. And they have not given any kind of hint in the memorandum saying that it is retrospective effect or anything. They are not uttering any word about the retrospectivity or clarificatory in nature. Therefore, this is our view. So these two are small sections when compared to section 54 and 54F, that is exemption of capital gains on sale of any residential house or any long-term asset by way of investing in another residential property subject to certain conditions. So this is a broad idea about section 54 and 54F. We all know about these sections. There was a amendment recently where if the capital gain is less than 2 crores, then you can invest in 2 properties with respect to in 54F. But as of now, we are not bothered about it. We'll see what is the amendment in this section 54 and 54F. The amendment in with respect to 54 and 54F is insertion of certain provisos for 54 and 54F. Basically, the provisos should say that the exemption should not exceed 10 crore rupees. If we see the language and memorandum, they clear or memorandum, if we say the intention of these amendments by way of provisos to section 54 and 54F is for the rich people where you are claiming exemption more than 10 crores, where you are making investment of more than 10 crores in residential properties. For those people, it is not applicable in excess of the 10 crores. In case, if, for example, I have a capital gain of 15 crores and I'm making an investment of another 15 crores for in a residential house to get away with this taxability of capital gains and to take the benefit of section 54, I'll be restricted. My exemption will be restricted only to the extent of 10 crores and remaining 5 crores is liable for capital gains. This is the basic intention of the amendments by way of provisos in section 54. And there is a equal amendment or similar amendment in the capital gain account saving scheme provisions also, in the set of provisions, where even the deposit also you can make only to the extent of 10 crores, not more than that. So this is the basic amendment to the sections. But what I feel here is, one, the capital gains arising in AY 23-24, that is till 31st March 23, if we have sold any capital asset, this amendment is not applicable to me. For example, on 15th March of 23 or 31st March 23, if I make a sale and I get a capital gains of 25 crores, 50 crores, 60 crores, this amendment will not affect my sale, because the exemption of capital gains will depend upon the which assessment year there is sale of asset. And if the sale of asset is in the year of assessment at 23-24, this amendment is not applicable, because this amendment is applicable only from AY 24-25, as mentioned in the memorandum explaining the provisions of the bill. And there is one lacuna in the language of section 54F. The mistake is, instead of using the expression exemption, they used an expression called net consideration should not exceed 10 crores. Why? You can say, why? What is the lacuna here? Because in section 54 proviso and 54F proviso, they use same expression, that is net consideration should not exceed 10 crore rupees, that is investment amount. If we see section 54 computation mechanism, the capital gain should be invested to get the availability of the exemption. If we come to section 54F, then we have to take the net consideration as an investment, not the capital gain amount, to get a proportionate exemption in the capital gains. So by way of reading the memorandum, the intention is to give an exemption up to 10 crores. But in the cases of section 54F, that cannot be achieved due to the mistake they have done in the drafting of section 54F. I will show you the example how we cannot claim the exemption of to the extent of 10 crores totally because of the lacuna in the section in the drafting. If you see this example, the sale consideration is 25 crores and the cost of acquisition of such asset is 5 crores and the capital gain is 20 crores. And I'm repeating once again, this is with respect to only 54F and not 54. So capital gains is 20 crores. If we make an investment of rupees 10 crore, because that is the maximum amount we can invest as per the section drafted. So the proportionate capital gains I'm eligible to the extent of only 8 crores. So I can never achieve that 2 crores in my lifetime, even though the intention is not that as per the memorandum. So taxable capital gains is 12 crore. So let us see this next example, which is very similar. The sale consideration is 25 crore. Cost of acquisition is 24 crores and the capital gain is 1 crore. So even if you make an investment of 10 crores, it will be restricted only to the extent of 0.4 crore. Only, that is 40 lakhs. Remaining 60 lakhs, you have to arrive at the capital gains. In case earlier, if I had invested 25 crores without considering this amendment, I could have got the entire capital gains exempted. But now it is not the case. That is not the case. Coming to the next example. Sale consideration is 25 crores. Cost of acquisition is nil. Capital gains is 25 crore. So investment in 10 crore, I can achieve 10 crore provided my cost of acquisition is nil. This will not be the case in any point of time, very maybe rare in 1 in lakhs of cases. But the real intention of the provision in the memorandum says that to provide exemption limit only to the extent of 10 crores. But in 54F, due to the lacuna in the section that is drafting, you cannot achieve that intention of the legislature. So this is the basic thing what we have to find. Maybe by way of Finance Act, they may correct this one. We have to see. Otherwise, we'll be facing this issue in future also. So the last provision of this session is 56 to 7B. In 5627B, it speaks about if there is any issue of shares by a company which is not where it which is not public, so is substantially interested, that is a closely held company, and if they issue shares to any person higher of fair market value of those shares, then such excess will be taxable. However, if such investment, that is if issue of shares is to a non-resident, if issue of shares to a non-resident, this entire provision was not applicable. As an example, I am a non-resident, I am a US citizen, US, there I have been brought up all this thing, I'm a non-resident of India. And if I make an investment by way of buying the purchase of shares, by way of subscribing to shares, and where the share value is fair, face value is about 10 rupees, and I invest at 10,000 rupees per share, I will not be, that amount will not be taken as income in the hands of the company. That is prior to the amendment. But now this non-resident also, there is status of the non-resident also has been included in 5627B. Therefore, any person, whether he is a resident or non-resident, when he is subscribing for the shares, and if it is more than the fair market value, the company will be facing the music. That is, the company will be have to take the amount in excess of FMV as its income. And as we know, this fair market value has been discussed or has been defined in the section itself. And for arriving at the fair market value, rule 11U has been prescribed. So I am not going into that, but the only amendment here is the non-residents also has been brought into the ambit of section 5627B. So with respect to this one, the amendment is effective from assessment at 24-25. Our understanding is the applicability of this section is it starts from or will apply for the issue of shares happened on or after 1/4/2023. But going by section itself, literal reading of the section 5627B, it says that any consideration received. So the amendment is very clear that it is about the receipt of the consideration for issue of shares. So going by literal meaning, it should be like consideration received on or after 1/4/2023 itself, this section is applicable irrespective of the date of issue of shares. But by going by literal logical reading, it is issue of shares in case if there is an issue of shares prior to 31st March 2023, on or before 31st March 2023, and consideration is received after 31st March 23, this amendment is not applicable. The reason because is, if you have to say the consideration happens only on the accrual. When shares are not issued and you have received a consideration, that will not amount as consideration, that will amount as only as an advance or share application money. Therefore, the applicable, for the purpose of applicability of this provision or this amendment, we have to see it is issue of shares on or after 1/4/2023. For example, if the shares are issued prior to 1/4/2023 and consideration is received after, then this non-resident will not come under this ambit of 5627B. And the implications of this amendment is the setback to non-resident investors and startups. And as we know, startups have been benefited by section 80 IAC and section 79 by way of amendment in Finance Act 2023. But by way of this, they are taking away that benefit which is available to the startups, because a lot of startups have investment from non-resident investors. And again, one more important point where we have to focus is on interplay between the FEMA and Income Tax Act. When we receive any amount from a non-resident, and usually it will be a foreign exchange, and it will be routed through FEMA regulations and RBI regulations, even though if it is an automatic route. But once we say that if it is in excess of face value or fair market value, then what happens to the, or what is the implication under FEMA for them? This has to be examined, and this is not the right time for this exemption because still we have not received any, we have not got any clarity on this amendment. Therefore, I just want to keep it pending for the time being. I have received about a couple of questions I would like to answer. And Mr. Ranganath Shinai is asking, while they have mentioned the date after which these policies will be covered 1/4/2023, but in section 56, they have not said that. Will it have any impact? Sir, I don't think so it is having any impact, because in case if they are saying it is applicable from AY 24/25, that is 1st April 20 assessment year starting from 1/4/2024, we would have got this confusion. But they are very specifically saying that it is only with respect to policies issued on or after 1/4/2023. And if with respect to these policies, if we are receiving any amount in the future, it is covered under section 56. So there is no requirement to come for any confusion. Under section 56, only this insurance policies other than unit linked insurance policy or key man insurance policies are covered. Therefore, this will not have any impact. Coming to another question, from Mr. Ranganath itself. Regarding interest, there is a ITIT decision even before amendment that interest, if claimed under house property, cannot be factored in capital gains. Yes, sir, I completely agree with you that they have the ITIT, some of the ITITs. I have Kerala tribunal and Gujarat, Ahmedabad tribunal, which is against the SSC, and some of the tribunal which are in favor of the SSC, where it says that they have factored this position and they have held. With respect to decisions against the SSC, they have held that even though there is no amendment in the act or there is no specific provision to exclude this one, it will amount to double deduction on the face of it. Those are the decisions with respect to which are against the SSC. With respect to in favor of the SSC, they have clearly held that there is no specific provision where the SSC cannot take the deduction, unlike 80C. If you see one of the clauses in section 80C, there is a specific exclusion where if you have claimed this deduction under any of the section, you cannot claim under section 80C. So for this purpose, to resolve this issue, they have come with this amendment. The final impact of this amendment is it is not clarificatory in nature. It is starting only from assessment 24/25, that is 1/4/2023. That means any sale is happening after 1/4/2023, this issue will arise. That is, you cannot claim it. Therefore, if you have claimed any interest under house property under section 24B till 31st March 2023, and if you are making any sale, now, you can claim it as deduction. So with this one, I just want to thank everyone, and I want to take any questions are there. Vignesh, you will allow them to take the questions, or they will pose the questions in the chat box?
So they can post, sir. As of now, we have answered all the questions.
Okay.
Okay, sir. I think so. That is those are the only questions. So
yes, and I hope I have covered in 45 minutes as per your instruction.
Yes, sir. We still have another 20 minutes if you want to deliberate anything.
No, and okay, basically other provisions, I just found something when I was reading this finance bill. I am sure that the other delegates will take care of this. But if you see section 115 BAC, there is a proviso to subsection 6 of 115 BAC, where it says that we cannot claim or we cannot shift out of this 115 BAC more than once. That is, once I have opted out of 115 BAC, I cannot come in again. But if we read para 5 of the relevant portion of the memorandum relating to that clause, it is other way around. There it says that once you have opted out, the reading like this is like this. Once we have opted out of this 115 BAC, I can come again to 115 BAC and again I can come out of 115 BAC, but again I cannot come back. That means they have given two chances. If we read the provision, provision is very clear, proviso to section 115 BAC 6, but the memorandum causes the confusion. So this is one important aspect in section 115 BAC. And other than that, I don't have anything. If any questions are there, I'll take it, or we can continue.
That's it, sir. So we'll conclude. So thank you very much, sir, for your time and sharing your knowledge on the recent budget. So it was really thought-provoking, and you shared certain examples which even pose some, dilemma on the scenarios what might occur in the future. So only time should answer. So thank you very much, sir. And
Thank you.
just a short reminder. So the next session is on assessments and appeals by Bharat sir on 6th February. That is on Monday, 5 p.m. So I request everyone to attend. So thank you. Sir.
Thank you. Thank you. Thank you.